Hey, it's Mike with PriceActionTradingSystem.com, and it is Tuesday. It's February 20th. This will be our chart lesson for the day. Feels like Monday. It actually is Monday as far as trading goes, but today is Tuesday. All day long I keep thinking it's Monday, but anyway, um, generally when there's a half day trading or halted trading on holidays, I'm not going to trade. You can see we had a little trend down yesterday, um, really from 7 o'clock to the market usually closes at noon. And I believe that's Eastern time. So I believe it closes at 11 my time. I'm not sure. I'd have to look at that, but I believe it closes at noon Eastern time. So maybe it's Central time. I'm not sure. But either way, there's generally not enough movement, and you don't want to get stuck in some trade and the market close on you. You have to exit because the market's going to close, and you don't want to get stuck. So I always take those days off, so you're not going to get a mid-morning chart or a chart lesson on days where they halt the trading earlier for holidays. So we're only going. So we're going to look at today, starting Tuesday. This is a range day, and I actually had a trader send me an email. I think he wasn't completely clear on what a range day is. He's giving me his definition of what he thinks a range day is, and I'm not sure. I didn't quite understand what he was getting at, but I don't think he quite understands what a range day is. And a range day just means prices are stuck between two key price levels. And today it was 27.34. You can see we broke above that temporarily, but we got back in it. And it's generally the overnight high and low. And if you notice, this is the high of the overnight. The market opened right in here. This was the high point of the overnight. This is the low point of the overnight session. And notice how prices are in between there all day except for a short period when we broke above. And that's generally what happens. You'll either find resistance here and turn down, or you'll get a little failed break higher and then turn down. And then when we got down to the overnight lows, which again is this point where I've got this line, we had a little failed break lower, and then we got back inside the trading range. So this is a trading range today. And generally what happens on trading range days? Prices move from the high side to the low side, from the low side to the high side. Here we had a little, I'll come back to that. And then from the high side back to the low side. This looked like a move from the high side to the low side, but it's not. It's a little fake out there. Notice you got to move up, a little two-legged correction, one leg, and there's a little zigzag stuff in, and then another leg. And those are two perfect measured legs. So what usually happens when you get two perfect measured legs like that? That is generally the center of a pattern. So now what you want to do, and really, you would measure probably from here, and if you measure that, uh, notice there's your measurement. You drag it over here, and that would give you your target right up here. And then the next way you would measure it is I would measure it from down here, and then I would, drag it over here, and that would be my second target. We didn't quite get that. We surpassed the one, and we didn't quite get the other one. This is probably going to be your more accurate one right here from here to here, because that's the last new low we made right there. So if you measure that one and then drag it over, actually if you go to right there, that's a perfect measured move. So but this would be your measurement point, the last low right here. Uh, and we went a little bit further than that. So that gets you in the right ballpark, but that's pointing back to the top of the range, and we didn't get there here. So you move this down just in case. And early on in the morning, I'd move this down, but you see we shot right through there. So you got to figure that it's probably back up here. And notice what happens when we head back up there. We find that resistance. We get the little overshoot, and then so now where do you expect prices to go? Back down to the other side. And you got a perfect little channel here working down. And somebody will probably say, well, why'd you start this right here? Well, this was the last new high right here. For one thing, notice this high is a little higher than this one. So that's the last new high. But really, this is where the downtrend started. So that was the point I measured from. If you use this other one, you can't find a decent trend line. Um, but you draw this off those first two swings, that confirms it. It comes back here, here, and look what happens every time it comes back to this key entry point. I had a conversation with another trader that he sent me his lines from one day, and they were totally different than mine. But what you will notice, if your trend line generally starts off the first two swings starting with the last high point. Most of the time it's going to be this high or this low right here. See, this was the overnight low, and you start off those first two swings, the low and the first swing. And generally 90% of the time that's going to give you the trend line. Occasionally it'll be something slightly different like here. But 90% of the time, if you start off that low and work up, that gives you the trend on this channel. You get the break, a new high. Coming down here, you actually overshoot this one, then you get the break, and it started working lower again. We don't, we're probably going to work on a retest of low, but since it's a range day, we may not get it. We may end up bouncing from here and going higher. But that's what prices are doing on a range day. They're moving from the support to the resistance. And it's all this stuff in the middle that can trip you up. But ask yourself, where are prices going after they come off the low of a range? They're probably going to the high. You had a chance to trade this to the short here, but when it reversed and gave you the pattern, then look for a measured move the other direction, or at least for it to head back to the highs. And that's where it found resistance first before it pushed through slightly and then turned down. And then once you get up here, ask yourself, what do I expect prices to do if this is a range day and going to continue and follow through as a range day? We could have continued trending higher. You might have got a trend line off here and off here, but you didn't. It's a range day. And once you get your trend line going down, off it goes. So where you expect the prices to go? Down here. So don't get fooled trying to buy. Follow the price action. Another thing is, look where the big moves generally come from. They come from the key entry points. You got this trend line right here, which you could have got off these first few bars. When it comes back to it, that's where the big move comes from. It comes back, it actually gets a break here, but that's the same place it takes off from the big move. Now coming down, it came off this high support resistance. That's where you got your big move. But then you get your trend line, and look where, when it confirms it, that's where your big move comes from. Then it comes back, it touches that line again. That's where your big move comes from. So, and then you got a shorter term working in here, and you actually get a break, but that's where your next big move comes from. So these key entry points are critical. And, if you can find them some other way, the trader that was telling me that he found some different lines, but it's my honest opinion, what he was looking at were what you call action reaction lines. And they're in there. There's lines all over this chart, but that don't make them trend lines. Generally, all your trend lines are going to come off the first two swings. 90% of the time, right here, it came off that first couple of swings right there, and there's your trend line working down. And that's just a shorter term trend line. I mean, that's not even really a short term trend line. It's just a really tight channel working down through. And you can see that channel, and you got a break here, a big, huge move to a new low, and then it moved. And then there's your first two swings right there. And that would have given you this next trade. And then you got a little trend working down, and then now you got another one working up. And this one's a little spiking channel in my opinion, right here. And then this is another one working here, and that measured move, you measure that leg and you measure that one, and you got a perfect measured move, and that's generally the center of a pattern. So when we made this high or low, you got to say, hey, we're probably going to the high, and we may get a measured move. And then when it starts working down, there's short-term trend lines and channels all inside here. And so these trend lines are not subjective. I know some of you, there's always somebody that comes in here and says they are, but one thing you have to understand is finding these trend lines it's a skill, and it's very visual. And not everybody can see that. So if you can't, they probably are subjective to you. But you can draw these trend lines. I mean, many a time I'll show you how I find this trend line here off the highs. I may find the trend line off the high and drag it down before I find it off the lows. And I've drawn it many a time off the first two swings, and then it held for the rest of the day for hours. And every time it came back to that line, prices bounced. So it's not subjective. And That's my opinion. And, I've been doing this for 15 plus years. Trust me, you can learn to find these trend lines and draw them. But if you don't believe they work and you believe they're subjective, then no, you're never going to learn to see them. And maybe you still won't learn to see them. So if you can, if there's another way, this guy's using moving averages. He's found some moving averages, and there's lots of strategies out there that work off moving averages. That's nothing new, and that's been around as long as there's been trading. And they're, in some cases they work. I don't believe that they're accurate enough long term to really make it work, but that's just me. If you like using moving averages and that works best for you, by all means, that's the way you should go, because a lot of this is a lot of the success in day trading is your ability to be comfortable, to find the entries, and to not get shaken up or to get emotional. So whatever you're comfortable with that works, that's what you need to be trading. So if you're not comfortable with trend lines and you just can't learn it, then and you find something you are comfortable with that works, by all means trade it if it works. You want to see it work long term. This works long term. Everybody probably can't do it, but not everybody can be a brain surgeon. Not everybody can be a professional baseball player. Some people are going to fail at this, and that's just the way it is. And a lot of people are going. Most people fail because they give up, because they have unreal expectations of what it really takes to do this. And you're not going to learn this after reading a manual and watching a few video lessons. You might learn some new stuff, but you're not going to be able to go out there and trade against professional traders and make money in a short period of time. 2 years is probably, a year and a half to 2 years is probably pretty quick for most people. I know people have been doing it for 7 to 10 years. They still can't do it. They can't control their emotions. They still fail. It doesn't mean that it doesn't work. It doesn't mean that people can't do it. It just means that person can't do it. Not everybody is cut out to be a day trader. If they were, we'd all be millionaires making millions of dollars trading every day. So just understand that. The key is finding what works and sticking with it until you can figure it out, or until you give up and say, "Hey, I'm not willing to put any more time into it." And that may happen for some of you. I hope that doesn't happen for any of you, but I know it will. I know that not everybody is going to be successful. Even people that have good intentions and think early on that they can stick it out and put in the time and effort. After a while, they get bored with it, or they decide that this isn't really it's not what I thought. I mean, I'll be honest with you, trading has gotten really boring for me. And that's one reason I started doing the teaching part, because the trading part, it gets boring. It's, if it's still exciting for you, I hadn't said this in a long time, but if you listen, you'll hear me say it a lot. If trading is fun and you still get emotional and you get excited about wins and you get down when you have losses, you're not even close yet. Trust me when I tell you that. You probably won't understand that now, but if you ever make it, you will understand it. You got to be like a machine. You can't be emotional. You can't get upset. You can't get happy. We're traders. We expect to win every day. We expect every trade to be a winner, but we know that's impossible. We know there's going to be some losers, and we don't get excited because we win, because we're expecting it, and we don't get emotional or upset when we lose, because we know that's part of what we do. If you're going to be a trader, you're going to have losses. Just keep those short and as few as possible, and you can get to where, trust me, you can get to where you have doing it the way we do it, you can get to where you have very few losers, because you can get to where you can sit here and find the best trades and trade them, and you don't need a lot of trades. You don't have to take but a couple of trades every day to make a really, really good living at this. Instead of taking more trades, once you get good at finding the best trades out of the 8 or 10 that are probably going to get on average, you only need 1 or 2 of them. Wait till you can find that 1 or 2, and then instead of taking more trades, just increase your, you increase your equity, your leverage. You just want to do, you want to leverage it higher rather than taking more trades. That's my strategy. I don't want to take more trades. I just want to leverage what what I know works. And so I don't have to gamble. Every time you enter, you're taking a slight gamble. And, if you can gamble less, then you're probably going to have more success. So I hope that's helpful. But let's talk about the trades. This is a range day. I already talked about the range and what to expect. I'm already 15 minutes this, and I hadn't talked about the first trade, but there's not a lot of them today. So that's probably a good conversation to have. But here's your low. You draw your trend line off those first two swings. Early on, I had it up here, but I think it's really right here. That's where you get the most touches, and we just had an overshoot right there. You'll see that a lot in the overnight. You'll get overshoots that don't really come into play, and sometimes you'll get breaks like this in the overnight, and they don't really come into play. So, the trend will continue. It'll get back in the trend line and continue on, even though you had a break. But that's, once you get into the regular session, it generally will follow the rules pretty strictly. So, nothing's ever perfect. That's one thing about trading as well, is that nothing's ever 100%. We know the odds are high. We know we got a set of rules and a set of strategies we follow that the odds are very high in our favor. Probably as high as you could get for taking a chance on anything. But it's not 100%. There is no 100% in trading. You're going to be wrong sometimes, no matter how good you are. And so just be aware of that. But anyway, we're working up here. You get your first two swings. So now we just need to confirm this. We really kind of confirmed it here, but that's a huge bar. There's a little bit of overlap right there. But when it tries to go lower again and closes inside that line still, and it actually goes lower and turns and goes up right here. When it went out that other side, I like going long right there. I don't think I would wait until this bar closed and try to go long right up here at this double top. I'd let it break higher, maybe drop a limit order in back here, or I'd have my stop right here when it went above that, depending on how it's set up. So quick, easy scalp. And then, of course, you get a break of the trend line. And you've already had a close outside this one, really. If you use those first two swings right there, you can see it's working down. Everything's closing inside, and then suddenly it closes outside and a big move to a new low. So now we're working the other way. So this is your first break of this trend line. We'll probably get a retest. So be careful going short. And here's a perfect little trap where you got this huge bar. This bar is like 4 points, almost, I think it's 4 or 5 points or something. And you just can't go short right there, especially right into those lows. But when this broke lower and turns up, that's a second entry long. Look at that high, pull back first entry, pull back second entry. And if this is going to be a range day, which prices are about to get to the open and they're still in the middle of the overnight highs and lows, that's a good sign that it may be a range day. At least it's going to start out that way. So we're probably headed higher. Plus, you're probably going to have a retest of this high. And just put your stop. Again, that's a really big bar. You might let it break higher and try to drop a limit order further back. And you could have got filled a couple of ticks back in that bar. And look at it go. And off it goes. You get a runner on this. And I'd probably hold it until we had probably right here. When we started going sideways and had some bigger negative bars, that's probably where I would exit. I'd wait for another entry. But we just end up going sideways, and the first chance you really get of a bar that's bullish that you can get in at the low so you can get out before that high is right here. And just so happens it takes off and rockets on up. And again, we're probably headed up here. That's what you be thinking right there. And then it turns down. And there's actually, if you draw this trend line right here, you need to have that there just in case it hits right here and bounces. But you see it didn't hold. So there's no confirmation of that trend line. Just skip it. Just delete it instantly and forget it. Don't let it sit there and confuse you and this and that. It didn't get confirmed. Let me show you that again. When you draw it off those first two swings right there, if it bounces right here and confirms it, then it's probably good. But notice how it pushes right through, and it's obvious that trend line is not valid. Okay, let me say one other thing too. Of course, this line, actually this trend line could be valid. You see that fits in there. It looks like we got an overshoot and a reversal. So it could be valid. But when it comes back at confirmation time, which is your third touch, notice you only got 2 swings and it goes through it, then it's not going to be any play any longer anyway. So just delete it. So it's not an accurate trend line. It's not helping you. It's probably just going to confuse you. So just get rid of it and look for a smaller term, a smaller section. And of course, you see these 2 measured moves. When we started lower here, look for a measure. Every time we started lower here, I'd be looking for a measured move. And eventually you got it right here. And this was like 2 perfect measured legs. And so, anyway, we're working down here. You really don't get a chance to enter this one. You do get a first entry long, a second entry long, and it fails. But you're just kind of sideways there. It's not a very good signal bar. It's kind of neutral. But look what happens. You got a new low, pull back first entry, pull back second entry, and you are looking for prices to test this low. So now you got enough room to get out and test that low. And you got a little trap here, failed second entry. It's really not a failed second entry long, but it is 2 legs up. And just go short right there. It's a pretty big bar, so again, you might let it break lower and drop a limit order in. And this is why we go for 4 ticks. It got just enough to get out, and then it bounced. And then it comes up here, and now by this time, it's looking like a little trading range, and you get a little failed breakout and big bearish bar. This one's real close to being green, especially when this one closed inside it, but it's still very negative and closed inside that original line. I like going short there. You got enough room to get out here. Of course, it runs all the way down and pushes through. Actually, I forgot to talk about this one. Notice the low, first entry, second entry. Even though you got a scalp out of that, that's like a failed second entry short. So you may consider going long there. If you push this all the way over to the far side, it's not really necessarily looking like a range yet, although there is a lot of bars stacked up there. It's not looking so much like a range just yet. So you might take that one, that being a failure and that being a fairly bullish bar, and it would have worked easily. And then now you got 2 legs up and a bearish bar, so you might try to ride it back down. Again, this is like a little failed break and a really nice bar, but it's right back up into these highs. But since we pushed on through and closed up here, you might consider, hey, you got enough room to get out before there. So you might take that one, but that's why that one's green, because this was your support resistance right across here and here. And you don't have much room there, because it could, notice how it closed right against that? It could have turned down there. But it does, it pushes on through and tries to go higher again and turns down and gives you a big bearish bar. I like going short there. Like I said, eventually you may get a measured leg like this, and that's what you're looking for. But the key here is you got plenty of room to get out before getting back down to this low, and you got that little trap there. And you definitely don't want to be going long right there with that neutral to bearish bar, and the bottom just kind of falls out. And then it turns up. Pull back first entry, pull back second entry, and notice that little short-term trend line. You get a close outside, move down. You need at least 3 bars, maybe 4, before you start to trust these shorter-term ones. But I think that's good enough, and you can see that it's a little two-legged swing right there, and a fairly small bar, chance to get long, and off it goes after 2 measured legs down. And this is a higher low than this one. And there's also, this is what I really like about this, when you're moving up first entry, pull back, that's a failed second entry short. So I really like that one. And off it goes. And maybe you're going to get that measured move now that you were looking for off the upper side. You really don't have enough evidence to know that, to be thinking real strongly that yet, but you got this 2-legged move in the middle, and now we're making higher highs and higher lows. So that is enough information to say, hey, maybe we're starting on that next leg, but you can't be certain about that yet until it starts really trending, and then by this first swing, it's trending. And this one's, I like this one, but I don't, because you got a new low and you push up, you come back, you test the trend line that's off those bars, it's back pulled back, tested the EMA, but the problem is there's a good bit of resistance across there, and you can see all that resistance, and you don't want to be going long right into that resistance. So I don't think you want to go long. I didn't mark that one even green. You really needed to enter down here, and you would have had a runner here if you had have entered there. And of course it's moving up, and where do we find the resistance? At the overnight high. And so now you got to get ready to consider a possible reversal. This is your first close outside that trend line. It didn't confirm it, but it's still a valid trend line. This is your first move. Just let it play out and consider, once you get your new high, start considering the possibility for a short. And notice how it gets your break. You move to a new high. There's your first negative bar, and that's your high, but you need to wait on a lower high. I mean, this is really far away from the EMA, but it could have turned up like it did here and pushed just enough to stop you out. So wait on the lower high, and it comes right here, and look, you're still way away from the EMA. You're way away from coming back. You know you're probably going to come back and test this breakout area, the overnight high, even if it's going higher. So that's a great place to go short. You don't get a runner out of that one. You get a failed second entry long here, but look at that big bearish bar, and then you get a big inside one. You're just kind of going sideways. So don't enter again unless you get a trap or some kind of setup. And it actually turns down here, but that bar has got way, you can't really see that. Let me back out a little more. See all that stem right there? That bar is too bullish, too neutral. Don't be going short there, especially right into that support resistance. It's a nice move, but you still can't risk it. Then you get a close outside, move to a new low, and guess what? It bounces. But guess where? Remember, we just came off the high of what looks like a range. So where are we probably headed? To the downside. So you need to be thinking short here, unless it pushes back through here. Until it pushes through here, finds support, and keeps going, you're thinking short. Doesn't mean you're going to take a short, but you're thinking short, and you're waiting on that setup. And then notice what happens. You get a little move up here, close outside, move to a new high. Nice second entry on a bearish bar. I like going short right there. And you could have let it break lower and dropped a limit order in here and even got a better entry. It would have come back a good bit, and all the way back to maybe one or two ticks there. It was all the risk you'd had, and then off it goes. And I would consider, since this was your first big leg down, I would measure that first, and I'd consider a possible measured move. And you can see that's a perfect measured move to the tick. And then it bounces. Didn't even get to the trend line, but it hit a perfect measured move, and it bounces. I don't think I'd go long here because we just came off the high. Even though you got a low, first entry, second entry, and then it turns and goes up. When it broke higher here, you might have considered it. It would have worked. There's enough room, but I wouldn't risk it. Not with not with that fitting off those lows and then dragging it up here and it fitting perfectly across here, or drawing it off the highs and pulling it down, it fitting perfectly. I just wouldn't risk it. So I wouldn't go long here. And then guess what? You get the break, move to a new high. You're kind of going sideways, but there's a nice bearish bar. Again on the second entry, because that's a double bottom, so that's like a new low. First entry, second entry, fairly small bar right off the key entry point. We've already had it confirmed. This is just another touch, another confirmation. You're starting to say, hey, this is a pretty good trend line right here. Go short right there. And that's where look where all your big moves came from, the key entry point, which is this trend line. And it's off to the races. And it gives you another little push up here and turns back down and goes out the other side. So you get a chance to add on or enter again here. And somebody asked me, I always talk about I prefer to trade in the morning. I'm not crazy about the afternoons, but that doesn't mean you can't trade the afternoon. I generally won't trade after 2 o'clock, but there was still some, here was a nice second entry short right here after 2 o'clock. We weren't back down to the lower side. I wouldn't have been, and there's plenty of room there. I wouldn't have been afraid to take that. It's the first break of this short-term little channel working down. But if you're, just as far as trading the afternoon up to 2 o'clock, that's wide open. After 2 o'clock, You can see not much happened after here. There's still some chances to get long, but really you need to see prices come back to here before you start thinking about a short again. So that doesn't leave you any time. So this is not worth it, in my opinion. Yeah, you could have taken some chances and went long in here, but I don't think it's worth the risk. We did get an overshoot, so it's possible we get a reversal. And there may not even be an overshoot here. If you get to playing with this may be just a midline down through here. I didn't even really look at it because it was so late in the day. But yeah, it's probably just a two-tiered channel. So this may not be an overshoot, even though we did end up pushing outside it. But we're trying to make a retest of a new low. But so yeah, maybe it's a two-tiered channel. And these first two were just overshoots of the midline. But I played it like this, and like it was an overshoot. But after 2 o'clock, it doesn't matter, so I didn't really look at it that close. But that's what I saw today. Fairly long lesson, but we talked about some good stuff there. Hopefully, it's helpful for some of you. But yeah, you got 2 legs down here. Even though one of these legs was in the day before, I hadn't measured this, but I'm guessing if you measured, it's going to be really close to being a measured move. Came up a little short, but that's 2 legs down, and then there's 2 legs up. And so far, we've really only got 1 big leg down, I would call this. And now there's 2 legs up, so we're going to make another leg down? Very possible. We could go up from here because we're in a range, but it wouldn't surprise me with that 2-legged correction right there. We may not make another leg down, maybe similar to this first one, or maybe like this one right here. So we'll see what happens after hours. Tomorrow you can look at it and see. But there's a good chance we may try to make another leg down. And that would be fairly interesting if we did, if we made a full leg down like this. That means we're going back down to around 28 or 2686, 87 range, right in there somewhere. So it'll be interesting to see if we do that overnight. But anyway, I'm going to wrap it up. This has gotten plenty long. We'll be back again to do it tomorrow. I'm done for the day. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.